Hey trader, Cecil Robles here, coming to you with a quick update for October 13th, 2014. And let me show you what we're doing here at yourforexmentor.com in the way of analyzing and looking at the markets today. So you'll recognize the chart that I have open as the Canadian dollar Japanese yen daily chart. I had given a little market review of this chart on Sunday. But I want to come to you again with a quick update here, and then also I want to talk to you about the Australian dollar, US dollar here in just a second as well. So as you can see here, we had this level of support, which is basically a structure support here. And if I draw a horizontal line out, you can see that's about where price is right now, right here, driving down into this area. Now, one thing that we're looking for, we're still looking for it at the present moment, although it does look like price is driving down fairly hard. We need to see some sort of a pullback here in order to really capitalize on any kind of continuation going upwards. Otherwise, if it breaks through this bottom area right here around the 195.31 area, and it continues to break down below that, then we'll have to reassess and reanalyze. Haven't taken any trades in this particular currency yet because we really haven't had any opportunity. If we go down to the 4-hour chart, you'll notice here we really haven't had any kind of a strong reversal pattern where we've had any kind of a what we call a medium-term structure support or structure low form in any way. So we're still looking for something like that, or even driving down into the 1-hour chart and looking for some kind of a breakout above highs. We didn't really get that. Here we could have seen a breakout, that didn't really happen. Here we could have seen a breakout, that didn't really happen. So the next thing that we'll look for, of course, is a breakout back above these highs right here, if indeed that happens, or some kind of, once again, structure support formation in some kind of a candlestick pattern, such as, once again, a medium-term short or medium-term lows forming, where you have short-term low, and then another short-term low that's higher over here, and that could give us an opportunity to buy and take advantage of the possible trend continuation, since the overall trend for the Canadian dollar Japanese yen is still up, although we've been in a correction, as you can see here. Let's go ahead and take a look at the Australian dollar US dollar now, and we'll look at this chart and see exactly what we have going on here. As you can see, we've got major support back over here from January of 2014 down here at some pretty strong lows here. We're looking at lows of around 0.86769 or 0.86597 rather. You can see prices bounce right into that area, 0.86421. And of course, it's bounced into that area again now, coming off of those lows today, as you can see. So let me zoom in here to where we're currently at. And as you can see, once again, we've bounced off of these lows. This made a lower low. This made a little bit slightly of a higher low right there, as you can see. And now we've created a potential medium-term reversal pattern, meaning that we could see price correct upwards here. Now, we could either take this on the daily chart and take a little bit larger of a pip risk. If we bought into this, we'd be buying above these highs with a stop loss below these lows, and we can get the distance there here. So I've dropped my Trade Manager Advantage software on here, and as we can see, we have a pretty good spread distance between our two lines here. We've got about 163 pips here on the daily chart between the high of this candle and the low of this candle, where we would put our stops below these lows here. So that's 163 pips. What we would gain out of this, not quite sure. We could see price rally back up. Of course, if we drew a fib from here to here, which basically constitutes this move, we could see price drive back up fairly easily into this 61.8 level, at which point that would be about a 315 pip run, so roughly about a 2-to-1 reward to risk ratio. Or what we could do is we could drop down a couple of time frames, go down to the 1-hour chart, and as you can see on the 1-hour chart, we've got a much lower risk here in terms of a pip risk. We've got a greater potential reward because we could see this really break out to the upside fairly quickly and run back up, you know, a pretty decent ways. So what I would look at doing is dropping down into this 1 hour time frame, setting your entries above this high right here at about 87.90 or so, and putting your stop loss down below this low at about 87.40 or something like that, and shoot for a pretty decent reward to risk ratio. And you can of course trail your stop along the way using what we consider our consecutive bar trailing stop. If you don't know what that is, you can always download that of course in our continuation method report. But nonetheless, this is a potential reversal trade setup here from the daily chart all the way down to the 1 hour chart, even throwing in the mix the 4 hour chart potential as well, possibly getting some breakouts above these highs here also. So once again, catch you up on the CAD yen. No trades that we've made there on that so far. And on the Aussie dollar, we've got some new opportunities. So I hope this video helped you out, and hope you're learning something from it. Leave a comment below and let us know what you think. Talk to you soon.